to talk about the commencement of production at the Chittoor plant, the increased capacity utilization and the rise in lead prices. Navin Prakash Sharma is the CEO now with us. Thank you for joining in. Good afternoon. Now, you started the commercial production of PPCP granules. Can you tell us the total capacity and your plans to increase your overall capacity utilization?
Good afternoon. Our total capacity of lead, aluminium and plastic touched 150,000 tons this year. And PPCP production we started last month at our Chittoor plant, which is our new plant in South India. This PPCP capacity altogether has touched 21,000. And after having commercial production, we are planning to add more capacity, particular to this Chittoor plant, to make it 6,000 tons from current level of 1,200 tons.
Right. Mr. Sharma.
When it comes to,
Right. Mr. Sharma, I was just looking at your one-year price chart. Your stock has almost trebled in the last 1 year from 60 odd bucks to almost 90 bucks. Talk to us what's fueling this optimism, not your reaction on the stock price, but about your company. What are the growth triggers for FY19? What number are you targeting by initiatives such as these as you've taken?
Our company is consistently showing a growth of 40% CAGR on top line as well on bottom line. So last year we did around 656 crore, and whatever capacity we added at various locations in lead, aluminium, plastics, all those capacities started giving us results in this financial year. And we are expecting our top line to grow by almost 50% this year. And for FY19, we are again targeting a growth number of around 50%, a turnover of around 1,400 to 1,500 CR. So this continuous growth rate and the addition of capacity when the time was there, right time we added capacity, and the demand has come in lead metal as well as aluminium and plastic recycling. We are expecting this top line will further grow, and all capacities we have added will show their results in FY19.
Follow-up question. On a 1,500 crore top line for FY19, what kind of margins would you clock?
We have shown a EBITDA margin of around 10 to 12%, and we are expecting, since our all new productions have come up, so we expect to keep the same EBITDA margin in next year as well.
Okay, that's a word when it comes to the overall financials. What is the outlook in terms of your overall volume growth as well in lead and aluminium?
See, volume growth is almost same numbers because the price are already factored in when we compare to FY19 numbers. So we expect to grow 40% to 45% in terms of volume growth in case of lead and aluminium. But when it comes to plastic, the growth will be higher because the value of less plastic is around 1/4 of lead price. So there the growth will be multi-fold percent. It will be 200% growth because this business has started last year only.
Sorry, I think I missed that. What kind of growth are you seeing for plastics?
Plastic numbers will be multi-times. It will be 2-3 times because this business has started last year only. So here the base numbers will be less. So the growth will be 200 to 300% because the numbers will be lesser. Baseline is less. So we did around 25 crore in plastic altogether as a group level, PAD, CP, PP. We expect this number to grow around 60 to 70 crores.
Given that lead prices have seen quite a bit of a surge, what is the impact that is going to have on your financials and your margins?
Lead price surge will not have much impact because we are completely hedged. Whenever we buy our raw material, we hedge on stock exchange or we have hedged with a pre-order booking. So only thing is that when prices are higher, that EBITDA numbers in terms of value are higher. So the price up or down will not affect much on the margin because of hedging mechanism.
Mr. Sharma, what is the utilization right now at overall of your plants? This is one expansion which is coming on stream now, but have you planned more expansion ahead, or you've already done that, which the benefits of which will start coming in? Just wanted to understand how geared are you to benefit from the tailwind which your sector is getting?
Yeah. See, next year also we have planned expansion. We have planned geographical expansion. We are planning to add some capacity in India, as well as we are planning 2-3 locations in Africa and Latin America market. So the growth or the expansion will be geographical as well as product expansion as well. So if you talk about Africa, we are planning to add up capacity at Mauritania and some more locations. And similarly, we are working in South Central America market. There also we are planning to add up capacity on plastics and lead or aluminum recycling.
Just in rupees crore terms, how exactly will the schedule look like? FY19, what's the capex? 20, what's the capex? And how are you going to fund that capex?
See, this FY19 capex target is around 150 crore. So partially it will be internal accruals, and we are also planning to take some term loan from various institutions to meet that capex requirement.
Okay, fair enough. We will connect with you as and when we get more details on the same. But Mr. Sharma, your stock is definitely looking very upbeat right now. Clearly pleased with the kind of commentary that you've made about strong growth in all of your segments as well. Just pull up the stock price at the high point of the day for a Gravita India, 7% if I'm not mistaken in the trading session.